Ira Epstein of Linn Associates with your morning flash update for this Monday, the 22nd of April, 2019, just after 9:15 a.m. Central Daylight Time. Well, we're all settling back in from the Passover Easter holiday period. Trade will get back to normal. We started off today with news that the U.S. is not going to grant waivers to the 8 countries that had been granting Iranian oil waivers to. So what that's done is it kicked up energy prices. You can see Brent up about $2, crude up, WTI $1.60, other products moving with it. While the Saudis and the United Arab Emirates have agreed to make up or keep the market in balance, the question is, will they? What does the market do, and how high do prices go as supply is taken off the market? Whether the U.S. grants any form of a minor extension, I don't know. When you were listening to Secretary Pompeo this morning talk, I think it left a little doorway there, but everything I'm reading on the news says it's May 2nd and they're not granting waivers beyond that. Little pressure coming from the economic data on housing starts and housing permits. You'll see that in a minute here, not keeping that market strong. Gold got a bid because obviously Iran's going to make a lot of noise. After this takes place, they'll probably threaten the Straits of Hormuz. We'll see if that works out to be anything, but that puts that market on notice. Dollar index, maybe it's getting back to looking at some of the economic data that's not the very best out there. By the way, there's a big difference between the U.S. maybe slowing down a bit in a recession. Keep that in the back of your mind. Slowing down as other countries try to come up is the balance that you look for right now. But bonds and notes still adding to real interest rates in the grain market as the planting season gets closer and closer. I was in Indiana over the weekend. Everything's bright green there. So what I saw, the farmers are probably very, very close to entering the fields. And no, I didn't see tractors out in the fields on this particular trip. Now, when I look at the National Association of Realtors, home sales down 4.9%. Expectations were down 2.3%. The number, 521 million units. They were looking for 5.3. Median price, 259.4. That is nearly up 4% from a year ago month at this time. Got an inventory of about 3.5, 4 months right now. Chicago Fed National Activity Index down 0.15. It's an improvement over the negative 31 we had last month. Friday, yes, we had data come out on Friday, even though markets weren't open. Housing starts down 0.3%. They were looking for it up 4%. That's a huge switch away. Permits were down 1.7%. They expected it up 0.3%. And housing starts revised were down from February from an 8.7, even worse, to 12%. So where's the help for the builders? I'm not seeing it right there. Cattle on feed report came out on Friday as well. The number to really study were the placements. It was 1% bigger than the market was looking for. Everything else right in line. So that's a bit bearish for the meats, and they did slip back today. I want to remind you, one of the things that I like to do is teach. And our guide to technical indicators is a great way for you in the afternoon to keep up with what I do. It involves price charts, the moving averages, the oscillators. It gives great examples. There's 2 volumes, volumes 1 and volumes 2. We did this with our friends from Futures Magazine many, many years ago. I still keep this going because it is just so darn good. It is free to you. Each one's about 20 pages long. You can print them out. They're in full color with all kinds of examples. How do you get it? It's simple. Either give us a call at 866-973-2077 or go to our website, www.iraepstein.com. You can also click right up here if you're watching me on YouTube. It'll take you right to that homepage. I'm Ira. You have a good day, and I'll see you all this afternoon with our end of the day videos.